All right, guys, how's everyone doing? I'm here with the second How to Master Part-Time Trading webinar we're doing. Today, we're going to apply again what we've learned in the 30-day challenge to the market, and it's a really good time to be doing this now because of what's going on in the market. And a lot of the stuff we're applying can really be helping you in this tough market right now. You know, we basically had smooth sailing through May to till now, basically until about 3-4 days ago. Uh, kind of not the best market to swing trade up until May, and then this last month and a half has been fantastic. So a lot of the stuff we have talked about in 30-day challenge would have helped us get really aggressive during that period, and it should have been the most profitable period for you this year. So I would say from about, just looking at my chart here, and I'm going to pull up my screen in a minute here, but about early May to middle of June should have been the most profitable time of the year. Should be crushing it right now. And a lot of stuff we've talked about in that 30-day challenge would have helped you know to get very aggressive in that period. So for example, for us, beginning part of the year, we didn't trade aggressively. We traded very aggressively through this period. Now, what often happens is you get these big runs like this, and when the market starts to pull back, you give back too much of your gain. Now, it's going to be natural that you might give up a little bit of it. You know, there are some traders who time it perfectly, set the shorts on right, and maybe they even make more money. That's fine. But really, when your bias is an uptrend, but the market is pulling back hard, and this always happens in uptrends. They don't go up in a straight line. At some point, they're going to get oversold. There's going to be some news coming out, and both of those factors have come in right now. There's fear of the trade talks with China combined, and usually it's a combination. You know, if the market had been range bound, it doesn't hit it as hard. But because we were extended already, just looking at my charts here. So if you see me flipping over here, it's because I'm on another screen and I've got my charts over here. And again, I'm going to pull them up in a second. But we've made this big run, you know, SPY from 256 to 280. You know, when you get news like that, there's going to be a hard pullback. All these people that have taken profits are going to be worried, and they start pulling their money out of the market. That's common. Now, what you don't want to happen to you is to give back a ton of your gains. I've already talked to traders who have given back all of their gains, or maybe even made it worse, and are below where they were before they had the big run. That's not where you want to be. You know, if you've made 15% during this run, 20% during this run, 15 to 20% gains, you don't want to now be at 5% or 10%. You know, if you made 20% gains, and now your gains have pulled back to 15 to 17%, that's good. So that's where you want to be. And obviously, if you've held through it and not made any losses, that's even better. Where I am right now, I'm basically through this period, break even or down slightly during this period, during this last 4 or 5 days, which is exactly where you want to be. You want to tread water. And now as we come out of this period, whether it's a down move or an up move, when I say come out, it doesn't mean the market went up. It means you come out of it, and we get some structure and range in what we're doing, or trend in the way the market's going. Then we can expect to make profits again. So now the market is basing here. Now we're watching to see, does it break out or does it break down? And this is where we aggressively go long or short. And you know, we'll see what the market tells us. We're going to look for clues. We're going to talk about that in a second. I'm going to go ahead and share my screen now. And at some point here, I'll take questions. The chat is not popping up for me. So hang in there for me, guys. I'm going to try to get the questions up here. Okay, fantastic. I can see you guys here now. All right, so I'm going to get the charts up here, and we'll do a little back and forth here. But I'm sharing my screen. Let me know if you guys can see my charts. All right, a lot of regulars here. I recognize some of your names here. A lot of you who have been going through the 30-day challenge, sending me some emails, and that's fantastic. Contact me whenever you need to. All right. And it looks like you guys can see my charts. Fantastic. Okay. All right. So now let's talk about what's going on in the market, and let's relate it to the 30-day challenge. So the post that came out yesterday was about volume and unlocking accumulation and distribution in the stocks you're watching and the market. It's more prevalent in stocks than it is the market, but we also want to assess what the market's doing as well. So I'm not going to rehash the whole thing. You can, if you haven't already, go through and read this article. It's on Bulls on Wall Street. Go into the blog. All of them are in there. And when you go into the article, down below where it says previous posts, if you haven't already, you can read all of the different articles. And what we're going to talk about today and relate it to the market is the volume pattern we're seeing. And for the future here, there's going to be 5 more posts on volume. That's how important volume is. I did 4 posts on risk because that's how important risk is. So, you should be managing your risk well. You should be studying volume. I would argue, and I talked about this in the challenge from yesterday, we could say that volume is even more important than price action in predicting future movements. Now, to actually make money, obviously price action is important. But for our predictions, volume is actually much more important than price action is. So let's talk about what we're looking for here. Now, we're talking about volume patterns, and we're talking about accumulation and distribution. So when we think about accumulation, we're talking about buying pressure. When we talk about distribution, we're talking about selling pressure. Now let's pull up SPY and see what's been going on in the market. Now through this run here, and we're going to combine this. So a lot of what we're doing here, and you can't take these challenges piecemeal. You have to, by the time we get to these, day 10, day 11, you should be trying to put these concepts together. So we talked about analyzing the market, and that's what we're going to do right now. Analyze the market, moving averages. We're going to focus on the moving averages here. So we're going to talk about moving averages and then obviously risk. And there's different ways to look at risk. There's risk in your trading. There's risk at a macro level, how you're managing your account. And we're going to put all of these things together now as we analyze this. So first of all, market analysis, which is going to combine with our volume analysis. What have we been seeing here? We're going to skip, we had the big market sell-off here, and now we're going to skip to April to now. And what has been happening through this period? It was, again, one of our most profitable periods of the year. And why was it such a good market to trade? We talked about this before. It was a broad-based move. IWM and the Qs were leading, and we were seeing a lot of good stocks to trade. Now, we could get deeper into market breadth indicators. We talked about the T2108 last time. We talked about looking at new high breakouts. We talked about breakouts within your own focus list. All of these things were leading us to seeing a very strong market. But there was one concern that we were having through this whole thing that we pointed out, that even though we did get more aggressive, we didn't get overly aggressive in terms of going into, huge leverage. And there are periods where I will leverage big. And we didn't do that during this period. But our main concern was the volume patterns in here. And let's look at that. Now, we had the big capitulation move right here. And a capitulation move, we're going to talk that in the next couple of challenges here, where normally we talked about in this less challenge here that essentially when we think of accumulation and distribution, big green candles are good, big red candles are bad. Big green candles or green candles that are bigger than the red candles tell us we're seeing accumulation, meaning the stock or the market is being bought, and there is more buy-side pressure than sell-side pressure. And the market should go up when that is happening, or ready to reverse to the upside if that's happening. We got the big capitulation event here. That was good. But look what happened through this period here. We had, as the market pulled back here, we had big red candles. As the market pulled back here, we had big red candles. Again here, and now we're getting the big red candles here. That is a concern. And that's why these deeper pullbacks happen as much as the market is trying to break out. In a really strong market, the kind where we go on margin and we don't worry about anything, these bigger dips on heavy volume wouldn't happen. These bigger dips on Lower volume would be fine, but the fact that they're coming on heavy volume is a little bit of a concern for us. There are a bunch of stocks that I was interested in getting into today, and I didn't. So, for example, Roku is one, and let's pull up Roku real quick just to show you a stock that looks really strong. Bottoming formation. Look at all this positive volume. This is the kind of accumulation I want to see. But market analysis stopped me from getting in that because I am a little concerned about the market. So we can see here, Roku, it's a normal pullback play. We talked about the moving average remounts. We love it when these pullbacks break through the 9 and then remount that 9 EMA. Roku did that today. I came close to pulling the trigger, even though I'm concerned about the market. I almost pulled the trigger on this one. Ended up not doing it because of the market analysis that we're talking about. Twitter is another one, and Kanal, founder of Bulls on Wall Street. You guys all are familiar with Kanal here. He likes Twitter as well, and we had a discussion about this today. Twitter looks fantastic. You can take a shot at it, but don't take a huge position because we're not sure about what's going on in the market. As fantastic as Twitter is, and Twitter is a fantastic stock, it's the stock that I use as our example in the volume article that came out yesterday. And you can still see my notes here. If I pull this thing out, let me just pull it out on the weekly so you guys can see the notes if you didn't see the article already. It is fantastic. Look at this accumulation. First of all, look at the distribution during the down move. Big red, big red, big red. You wanted to stay away. Every bounce was going to fail in Twitter. But look at what has started to happen in 2016. And now we started to see a change in trend in accumulation and the volume pattern. Big green here, big green here, big green here. Long term, I think Twitter is one of the best stocks out there in terms of what we're seeing here. Obviously, you have to have a trigger, but overall, looks very strong. I expect it to trend. My expectation is that it's going to eventually test the IPO high up here at 70. And if it breaks that high, it would basically do what Facebook did in its early period. I'm getting off track here, but that's okay. When you think about IPOs and you see these IPOs that get crushed in the first few years, if they ever do break their IPO high, that usually sets off the next big run. If you were to pull up Facebook, you're going to see this same pattern. Facebook IPO high very early at around 45, pulled back all the way down to 16 or 17, basically what Twitter did here. In year 2 or 3, somewhere in there, it broke its IPO high, and basically Facebook has been running ever since. I think I accidentally said Twitter again, but Facebook has been running ever since. So same thing is happening with Twitter now. But the question for us is a quick swing. If you're thinking long term, you can just jump in now and hold and not worry about it. But the question is for our swing right now, if we take an aggressive position here, how does the market impact it? As strong as Twitter is, as strong as Roku is, Netflix came back strong today, pulled back up over its 9. Let's look at a few others here to see if anything was good. Spotify got back up over its 9. Tesla almost got back up over its 9 today. But we have to be careful because of the market and our market analysis. So we have to keep that in mind. So that's what we're concerned with in terms of volume. Now let's talk about the moving averages. So we talked about volume. There is a concern when it comes to volume. Now let's talk about moving averages. So we know where SPY is here. In a strong trend, SPY, a market or a stock is going to hold the 9 EMA. And for the most part, SPY has done that. You can see here since early May, going up to 280 here, had a little blip here where it gapped down, but it recovered very quickly. That's the other thing. If it does break down below, does it recover very quickly? And is SPY or is the 9 EMA in an uptrend? And it basically continued through an uptrend through this period here. Now look what has happened recently. We've seen a change of character in the 9 EMA. The 9 EMA has rolled over. That is not a good thing. Not only has it rolled over, price is below that level. So the fact that we're below the 9, the fact that the 9 is rolling over leads us to be concerned, especially when we talk about the volume pattern as well. Now, does that mean we trade scared and don't take any long positions? No. We just know on a macro level we have to manage our risk better. We have to be careful in our positions. I did take one long position today, but I wanted it to be in something that's not tied to the market. So PBYI here, for example, had its own news today. It was a fantastic day trade. I'm sure all you day traders here at Bulls on Wall Street had your eye on this. I'm sure Kunal had his eye on this. But we can see here, big, strong breakout. It's a low floater, the kind Kunal loves, the kind I love. Breaking out here was very strong. Huge volume, huge explosive volume compared to what it normally does. It's a biotech stock. It came out saying that it expects that there's going to be some cancer approval in Europe. I don't know the specifics of the news, but it was that type of strong news that we want to see. And it broke a downtrend. This is not affected as much by the market. So I was willing to take a small shot, and it was a small shot, whereas my risk has normally been during this period, anywhere between $1,000 and $1,300. I only risked about 700 for this trade. So I pretty much almost decreased my risk by 50% on this trade, or maybe by 40%. Why did I do that? Because I'm concerned about the market. And even though I picked a stock with its own catalyst that doesn't have to worry about the market as much, the market still could impact it. And I want to be careful. And that's the only stock I took today. Even though I love Roku, I love Twitter, I love Netflix, I'm going to be careful. I'm going to wait. And if this truly is if the bounce is truly going to start here, then we will have other opportunities to get in. So this is what I'm waiting for in terms of the market. I want to see a remount of the 9 here. If the market can remount here, and even better, if it remounts and we see heavier volume here, if green volume starts to tick up over, say, 80 million, that would lead me to be more comfortable, and I'll get more aggressive. Now let's go to the Qs, because basically tech has been the place to be, and retail, but we want to see tech strong. So let's look at the Qs. The Qs is NASDAQ. It's heavily weighted in tech. Again, big gap down. It's below its 9 EMA. I want to see it get above the 9. If it gets above the 9, then you'll see me start to get more aggressive. Then I will start to go into the Netflixes, the Rokus, and all these others that are more tied with the market, and specifically more tied with the Qs. And then IWM as well, same thing. It's below its 9. If these things tomorrow or the next day remount their 9s, I'll feel much more comfortable. And as I've been talking here, I've been scrolling through the chat. I see Kunal's in here, and I haven't gotten a chance to read what you guys are talking about, but I think there was some talk about VIX. Let's take a look at UVXY, unless I'm missing it. I think that's what you guys are talking about. UVXY here, big pop here. Now through this uptrend, let's think about what's been happening here. Every one of these big pops has failed. We haven't seen an extended run in VIX, which is a good thing for the market. So there's one of two things I'm thinking of here. I don't know what you guys were discussing in there, but if VIX pops here and then starts to fail, that is going to be a really good signal for the market. You know, when VIX failed here, that was a really good signal. When VIX started downtrending here, that was a really good signal. When all of these little pops failed, that was a really good signal. And what's interesting is, even with these big volume pattern, these big green volume candles, VIX is still crashing. So we can think of this two ways. One, it can help guide us in terms of if VIX starts to fail again, we know we're safer when it comes to getting more aggressive with our trading to the long side. And also, you could actually, if you're a really aggressive trader and trade very carefully, and maybe I shouldn't even be mentioning this, but if you are a really risk-averse trader and you take really small position sizes, you manage your risk really well, you could even short UVXY, or take it safer and short the double leveraged rather than the triple leveraged. So that's some of the factors we're thinking about in terms of the market, in terms of managing our risk. So when we get to, so we've talked about volume, we've talked about the market analysis. We've talked about how it's impacting our outlook in actually trading stocks. Now, and we've talked about moving averages. Now let's talk about, and the 9 is very important here, and breakdowns of the 50 and 200 are very important. If these levels break, after a consolidation, we actually consider shorting very aggressively. So these are some of the things we're thinking about related to our market analysis, moving averages, trading with volume. Now let's talk a little more about managing risk and how we're going about this. Now, until the market gives us clues and reveals the direction, early on in this period, I always trade risk averse. So essentially, when I'm picking stocks, not even on a macro level, but on the micro level, when I'm actually picking my stocks to trade, I am going to trade them smaller. And when I say smaller, it's not position size. I don't care about position size. What I care about is the amount I'm risking on the trade. So if, again, what I said before, my normal risk has been around 1,000 to 1,200, 1,300. Yours is going to be different according to your account size. If you're trading a $10,000 account, your risk should probably be $100 to $150 per trade. But during this period, let's say you have a $10,000 account. If your risk is normally $100 to $150, maybe decrease your risk right now to $70 to $80. So if you take some of these losses, it's not going to hurt you. But then as the market starts to strengthen and starts to reveal itself, whatever direction it is, and you feel more comfortable with it, with that trend, then you can start getting more aggressive. So right now, as long as we are sandwiched below the 9 and the 50, my risk is going to tend to be between, say, $600 and $1,000. And obviously then my wins need to be between 1,500 and 3,000, somewhere in there. Your win should always be bigger than your risk. So that's what I'm going to be looking at in terms of my risk reward. Now, as the market reveals itself, if we get up over the 9 and start trending up, I'll get more aggressive and get back to my $1,000 to 1,300 or 1,400 risk. Same goes for if we start to break down here and I feel like we're getting some short or a downtrend or some good short opportunities, I'll increase the risk again to around 1,000. Now that's on the micro level. Now on the macro level, you also need to be thinking about the fact that if you're shorting 7 different stocks and you're risking, say for me, say $800 per stock, I'm really risking about $5,600. So you have to think about it on the micro level, and I feel comfortable with that. But I would not feel comfortable leveraged to one side, and I'm risking $10,000 to $15,000. So you have to think about it on a macro level as well. Until the market reveals itself, you don't want to be risking, aggregate, take all of your positions in aggregate, add up your risk on those, and you want to make sure right now your risk combined is not 7 or 8%, more than 7 or 8%. And even that right now might be on the high side. And if you're confused about anything I'm talking about, you can ask me a question here or go through and read these articles here, watch the videos. And if you do that, I think it's all going to become clear. All right, guys. So that's what I wanted to go over today. I'm going to, in terms of relating it to what we've talked about in the challenge. Now, let me go through some things we've been doing here. I am in an oil position right now, and oil was very strong today. If we look at oil, oil popped again, up 10%. UWT was up 10%. So I'm trading off USO, which is the ETF. And then my actual trading vehicle is UWT, which is the triple leverage, because I want the extra volatility. So you can see here, UWT. What do I like about oil? Oil has been in an uptrend. You can see here, all of these dips have been bought. So essentially, every time oil has dipped through this uptrend, once it starts to bounce, it has set up the next big run. And that's what we're doing here. So you can see here, we had another big pullback. There was a big pullback here, a big pullback here. These pullbacks look small, but when these happened, they were big pullbacks. It pulled back from 22 to about 19 here. So that's about 10%. So another big pullback here. I wanted to see this area in here shake out. And once it did and remounted the 50-day moving average, I felt comfortable. So we entered here 2 days ago. It was either 34 or 35. And you can see it's popped up to 37. Highly likely, I think that we're going to hit 40 here. Now, if you're looking at the volume pattern, I want you to notice one thing here. Even though this is a red candle here, sometimes we have to analyze a little deeper and not just say big red is bad. Because you can see here, this was actually a hammer and almost closed green. So I actually consider this like a green candle. So I'm seeing good volume in here. A little pickup as it dipped down, but what I liked was the pop here was bigger than this volume in here. So I actually like the volume pattern here going back to May. I like the fact that, you know, every pullback has led to a new run, and we're getting that here. And finally, we rebounded the 50-day moving average. So I feel confident we're going to hit 40 here. Now, what I'm analyzing now is how do we get to 40? If volume continues to pick up, these levels look strong, and I will monitor the news a little bit, see what's going on with OPEC and, you know, all the news that has been coming out with oil. But so I've labeled it as my initial target being 40. If it does hit 40, I'm going to get 3-to-1. It's going to be a fantastic trade. But if I think that we can actually break this high, I'll keep the position on and go for a bigger win. That's one way to play it. The other thing I can do is I can just get out, lock in my profit, and if we do break out over this level, I can always get back in. So there's two ways to play it. I haven't made up my mind on which way I'm going to play. I'll decide that as we get if we get closer here, in terms of how we'll end up playing that. Now, we've all been watching or trading IQ and IQVIA, whether it's been day trades or swing trades. Now, how do we analyze this? So I went short on Friday. I went short IQ right around 40. Basically, this is like a parabolic short setup. Those of you who are bootcamp members, Bulls on Wall Street Bootcamp, I go over a lesson on this. So you guys are, those of you who have seen this or been through the bootcamp, know this setup very well. Basically, if a stock runs 50 to 100% in a short period of time, I look for a strong reversal signal. We got that here, trended down. Now, I could have taken profits yesterday, but I wanted to see if we could get a bigger move and end up reaching support levels down here, 24.25, which would make it a huge trade. Now, we're bouncing here, and when you are shorting one of these parabolics after a big run, it is very rare that the stock is just going to go all the way back down to where it came from without a bounce. So you have to be able to play through these if you want the bigger win. Now, you can be content with a 2-to-1 or 3-to-1 and say, I'm fine with that. And we were at, so I entered around 39.40. I think my stop was about 3 points, and we were up about 8 points on this. So it was 2.5-to-1. So you are getting a spot where you could exit the trade, but I want this to turn into maybe a 5 or 6-to-1 trade. I not only want, I think it could happen. But for that to happen, you have to be able to play through some bounces and risk giving up a winning trade. And that's what I'm doing right now. I'm risking giving up a winning trade, but I'm not going to let it turn into a losing trade. So what I've done now is where my stop was around 43 before, up at the top of the range, I have now moved my stop to entry level. So basically, I'm in one of these spots that I love to be in. That's where the trade is either going to be a break even or a win. So, you know, if it's a break even, yeah, that sucks that I gave up a win, but at least it's not a loss. And, you know, my account obviously stays where it was. But this gives me the opportunity to stick with it and get the bigger win. Now, I know a lot of people will partial here. One, you have to have a big enough position size to partial, and I didn't take, it was a speculative position. So in a stock that could gap up against you crazy. So I didn't want to take a big position size. So essentially at this point, if I were to take half off, it just wouldn't be a big enough win, even if it gets down here. So I have to make the decision. Do I want to take, go for the big win, or do I want to potentially break even? And I'm willing to break even on this trade. So that's where I'm at right now. I'm in UWT. I'm in IQ short, and I took a low risk play in PBYI today. Essentially, if I lose on this trade, I'm going to lose about $700. If I win on this trade, and even, you know, I think this, you know, potentially the way this broke out, and you see past history of these breakouts, this thing can really run. I mean, this last breakout went from 39 all the way to 130. Now, I'm not expecting that, but even if it gets to the 200-day moving average, which is at 83, I'm looking at a 17 or 18 point gain, and I'm only risking 5 points. So I'm at least getting 3-to-1, potentially 4-to-1 if it even goes higher. So that's the idea behind PBYI. And also remember, it's got its own catalyst and not tied to the market right now. All right, guys, that's basically what I wanted to cover today. I think my chat has frozen up here, but if you guys have any questions, let me know here. I'm going to try refreshing this and see if that helps. Okay, let me go through here, see what you guys have been asking. Okay, there's a question about Twitter, and we covered that. Okay, you guys had some, you talked about VIX. We already covered that as well. All right. Will you start shorting if things get below the 9 or wait for the 50? I don't think this is a good spot to short yet. Oh, and by the way, guys, stick around because I'm going to reveal, when I'm done with your questions, I'm going to reveal the winner. I should have mentioned this early on. I'm going to reveal the winner of the free year of the swing trade service. Most of you guys already know this, but I run the swing trade service at Bulls on Wall Street. You can see the swing alerts page here. Every day you get a video with my market analysis, a little summary of it, the focus of stocks we're watching. You get trade alerts, so whenever I'm in a trade, you get the trade alert here. You can see all the trade alerts that have come out recently. In here, you're going to get the winner is going to get a year of that and one mentoring session with me. So private mentoring session. So stick around in a few minutes. I will let you guys know who won that. All right. So Liad has asked, will I start shorting if things get below the 9 EMA and 50? I guess it depends what we're talking about in terms of which index. So let's look at the SPY. The SPY right now is below 50. If SPY starts to trend down here below the 50, I will consider shorting at this point. Ideally, I'd like to consolidate a little first, and that's a little bit of my concern. I don't want to short. I despise shorting when the market is oversold, and you can see stochastics are right here at 30. I'd like stochastics to move up a little bit before I short, but definitely if a bounce fails or we consolidate and break, I would consider shorting. Now with the Qs, it's a little different. We could short if we try to remount the 9 and fail, or if the 50 breaks. So those are the two spots in the market I'm looking to set my bias for short. And if that happens, then I will consider getting aggressively short. Other than that, I will take a few select shorts like I did with IQ just as a hedge. And if stocks are extended or just breaking down, and it looks like that we should be shorting. Okay, HUYA. I am actually in HUYA, not for Trade Report members, but in one of my other accounts. I've been short HUYA as well, and it's basically the exact same analysis. So what we're doing with IQ, you should be doing with HUYA as well. If you're already short, you're in a good spot here. Now, if I'm not in it yet, this is what I would be looking for. It's basically put in a pivot right here, and that's this right at this consolidation range. Look at how perfect that is. It basically went right to the old buying and selling support level, and now it's bouncing. Now what I want to see is a bounce failure for shorts. If this thing tries to remount the 9 and fails, I would short. If it breaks below the 30, it breaks before the 30 level here, I would short. And if it remounts a 9, I would consider getting back into the long side. And definitely, if you just wait this thing out, and if it ever breaks 50, I would consider going long at that point as well. All right, Helly, Swing Alert member for the last 2 years. I'm grateful for the feedback through YouTube. Okay, fantastic. You're welcome. Comments on The book, Complete Guide to Volume Analysis. I'm not familiar with it, so I couldn't tell you. OSTK. Let's take a look at OSTK. I wouldn't want to be long, definitely. Um, Maybe you could short here, but again, the concern is definitely a topping pattern here with overstock. I would not go long overstock unless it got back up over its 200-day moving average, which it definitely could. But this was a topping pattern in here. If it consolidates and breaks this level here, where basically where it's at right now, I would consider shorting. And there is room to where I think is that where it IPO'd at? Yeah, IPO'd around that level, I think, or at least that's a big range. So you have room to 20, but I would like to consolidate first and then break before I would consider shorting. And the only way I go long is if it breaks a 50 or it gets very extended and turns into a bounce play. All right. Do you ever have a stop in a position other than the initial stop or break even? Yeah. So, as the stock, my initial spot is to put it at break even if I've had a big run in the stock. Then I'm going to move it on, making sure I lock up enough profit. So I do move the stop up. To the downside, I will loosen it occasionally if there is a strategic reason to do so. Okay. Do volume patterns matter as much intraday as on the daily? So I'm assuming you're talking about if you're day trading. I'm not sure what Kunal's opinion on this is, and I know a lot of people follow volume very closely intraday. I tend not to because I haven't got a good edge, and I tend to get faked out a lot if I focus too much on intraday volume when I'm intraday trading. So I personally uh, don't use intraday volume that much. That being said, that's just me. There's 100 different ways to trade effectively. I'm not sure what Kunal's opinion is. Kunal, if you want to chime in here, you can give him yours. But for intraday, I don't use volume that much. For swing, volume is very important for me. All right. Thoughts on MMTY? You're welcome, Rivera. Okay, I'm not even familiar with that stock. What was it there? MMTY. And it's not coming up for me. So TC2000 doesn't have that one. Take on Google is basically my take on the rest of FANG, outside of the fact that Google has been lagging the rest of FANG recently. I'm not sure why that is. I wonder if it has something to do with China and the fact that it's a little more tied to China. And those of you guys who are interested in that volume question, looks like Kunal has some opinions on it. His is a little different than mine, and that's fine. There are a lot of different ways to trade, but he does pay attention to volume closely. Okay. Let me mention one thing about the volume too. I do pay attention to the volume on the breakout in terms of, is it a high volume breakout? But the intraday candle, so if I'm looking at the 5 minute or 1 minute, I don't pay attention to each one of those minute volume candles. Maybe Kunal does, and I'm sure he has okay, he doesn't either. So actually Kunal and I are on the exact same page when it comes to that. Okay, back to Google. Google is in a spot where I would not touch it right now. It is lagging the rest of FANG. It has failed the high here. It made a high, then failed here, then failed here, and now is in kind of no man's land. So what I would do here is, if it does run back up over the 9 and show some strength, maybe you could get back in. Maybe you get an oversold bounce, but there's no need to play Google. There are better stocks to be watching. So in terms of opportunity cost, why pay attention to something that is not giving you a great setup when you have a much better setup in another FANG stock like, say, Netflix here? Okay, thoughts on, are your stops mental or, metal stops, mental stops, or are they put through, which I think you mean a hard stop? It depends. If I'm looking at the screens, I use mental stops. I don't want my stops to be seen. Obviously, if I'm away from the screens, if I'm traveling or I'm just doing something during market hours, I have to put a hard stop in at that point. Tesla. Tesla's interesting here. It looked pretty weak. Let me ask you guys. Here's a question for you guys. Analyze the volume pattern on Tesla. Do you see accumulation or distribution? And then I'll answer a few of your other questions and get back to Tesla. How do you base your 5-minute entry on a, I'll leave that up to Canal. So first of all, I don't even usually trade on 5-minute charts. I'm usually trading 1 or 2 minute. So Canal is the expert at that question, Coco 20. So Canal will answer that one. You swinging Walgreens upside ahead of earnings. Good question, Irvin. I mentioned Walmart and Target today. And honestly, I didn't even know when earnings was, so I'll have to look up the earnings. But yeah, it's interesting that retail was, on that really crappy day yesterday, retail held up really well. Not only the kind of more speculative retails like, Buckle and, some of the apparel stores, but even the big guys like Walmart was green yesterday on a horrible down day. Target was also green. So I'm definitely watching retail. I do not have positions right now in them, but I am paying attention to retail. Okay, DPZ. Let's take a look at DPZ. Domino's looks good. This was not even on my radar, so thank you, Jonathan. I'm actually going to put that on my watch list. I really like it. So big run here, good volume pattern. The breakdown yesterday was just with the market, and then today holding the 9. Again, much like Roku and Netflix and these guys, I still would be cautious because of the market. If you want to take a shot, take a low risk shot, that's fine. Don't take too many, but maybe in like one stock. So, take a shot with a Netflix or a Dominos or a Roku, but make sure your risk is in line. And then if it starts to bounce strong here or breaks its high, I would get aggressive. But really good pick there, Jonathan. Okay, most of you see what I see with Tesla. We're seeing accumulation here. So looks good. Again, has not broke its 9 yet. And then it has round number 350 around here as well. It's kind of a weird spot because you have 350 here, you have this range in here, and then you have another high that it just made here. So it's an interesting spot. The easiest play would be wait for a break of the high. But I think if it starts to show strength above 350, you can take a shot with Tesla, especially with this accumulation here, oversold, and maybe even take an early shot here where it is now, and small position size, a little bit of a loose stop, don't risk too much, and it would be okay. I agree with Kanal. Never best bet against Elon Musk, even when he's got some negative news lately. Look what's happened with the stock. Everybody's been predicting its demise, his demise. He's had some Twitter rants that were a little weird, but then look at him. Look at the stock. It's been fantastic here. And I still do have a long-term position in Tesla, by the way. Etsy. Fantastic stock. Huge run here. Specialty retail. We talked. So think about what's going on here. Look at all the factors that make Etsy a good stock. We've got fantastic accumulation or volume pattern. It's on the low float side, 118 million. Not super low, but that's fine. It's not huge either at 118. It's in a sector that we like, specialty retail. Retail has been very strong. And I'm assuming this was an earnings breakout. Huge breakout here. So definitely a good stock. The question again is this an entry signal? Definitely should be on your watch list and even your focus list, which would be when you're more ready to enter. We have to think about the market now. And the other tricky thing is, while it's bouncing off the 9, the low gap level here is 40. And then we have now, so you'd probably need your stop down here, let's say 39. So you need to risk about 2 or 3 points. An initial target here would only be about 2 or 3 points. So you're not getting a great reward to risk unless you say to yourself you're going to hold until it could potentially get to 50. Then I think you'd be okay with the trade. But fantastic stock. All right, guys. Looks like that's the extent of your questions here. So great Another great session here, guys. Great questions, great turnout. Remember, we're doing these every couple of weeks. This is going to be a regular feature, these YouTube lives. So the next one should be in a couple of weeks here. We'll let you guys know when it's scheduled. And then those of you, oh, I'm sorry, I've got to say who won the free year of the trade report service. And let me get off the screen share here. So the winner of the 1 year of the trade report service and then a session of mentoring is, I hope I'm saying this right, Suhasan Ravindran. So Suhasan Ravindran, I think that's an Indian name, as you can see. I don't know, I don't know this name, but you've won a year of the service. I'm looking forward to chatting with you, getting that mentoring session in. I'll have some good stuff for you. And then you're going to get a year of the service and the trade alerts. And you're going to get an email as well. So if you're not here, I haven't seen your name up here, but if you are here, shoot me a message in the chat and we'll get together right after the session here. But you got a year of the service. And now remember, guys, we're going to be doing these every couple of weeks. If you want to become a trade report member, go over to Bulls on Wall Street, sign up for the swing trade service. Shoot me an email. I want to chat with you guys. Any questions you have, and make sure, we have the paid services, but if you go into the blog, there is so much good free content, not only from me, but from Kanal and from everyone else. There's probably better free stuff here than most people's paid services. So check out the 30-day swing trading challenge. We're on day 11. Initially, I was going to run through June, but we'll run it through mid-July. I should be done by then. And by the time you get, I can almost guarantee here that by the time you get through the 30-day challenge, you're going to practically be a pro at swing trading. So, and then give me feedback. Let me know how you guys are doing. And I will see you guys next session. And then again, contact me anytime. All right, guys. Talk to you later.